an undisclosed location somewhere in the Northern Hemisphere. It's everything Wall Street doesn't want you to know, everything the financial media won't tell you, everything mutual fund managers are hiding from you. This is the voice of the underground, the Wall Street Underground.
There's a man who leads a life of danger. To everyone he meets, he stays a stranger.
Well, the mutual fund promises about this bold new future. How come Wall Streeters aren't running for their lives and mutual fund hucksters? Why is no one talking about the $8 trillion they've wiped out?
Secret Asian man, secret Asian man, they're giving you a number and digging away your name.
Now, here's the voice of the underground, Maverick International financial analyst, Nick Guarino.
Hello. You are here. Welcome to Radio Free Wall Street. This is our 5 o'clock New York time live streaming TV show on the World Wide Web, going out to everybody with a brain. And by the fact you're here means that you must be smart. And you want to know, and I'm going to tell you. This show tonight is dedicated to what is the looming retirement crisis. And it has nothing to do with anything that's going on lately, okay? It's all about the math. And the reality is that we've had 10 years of the lowest interest rates ever. If you went into your bank and you wanted to buy a certificate of deposit, why bother? They actually calculated the return in percentages of a fraction. So most people with 401ks, 10Ks, REKs, Roth, and the various retirement schemes ended up getting sucked into junk bonds. Now, junk bonds are called high yield, but they're not really high yield. They're junk bonds. The reason why they yield high is because the credit's very dicey, and priced into the market is a risk of default. Unfortunately, in 10 years of near zero interest rates, the junk bond market became distorted. It didn't accurately reflect the risk, and people were just looking to make a few extra percentage points of chasing yield. So what's happened is the retirement savings of America is stuffed with junk bond debt of companies that could marginally make any money during the lowest interest rates ever. Now, this is your horror show. I'm going to tell you what's happening to you. We are heading to another recession. And this time we have $11 trillion in corporate debt, the highest ever. And the corporate debt that is junk is $6 to $7 trillion. The problem is that the market has not priced in the risk. And that means that a whole lot of people are holding a whole lot of debt that's about to default. Now, in a recession, we always get massive debt defaults. But this time, the problem is that we're going into one hell of a recession, and the amount of debt corporations have priced on is numbers like never seen before. So we are headed for the next crisis. Now, the last debt crisis was a banking subprime crisis. A lot of individuals didn't get to come to the party till later because this was debt between institutions. This time, the institutions added to the people about to wipe out in debt the retirement savers. Because of massive campaigns, advertising campaigns, I'm sure you've seen them, retirement calculation, how much you needed 30, how much money you needed 40, how much money you needed 60, how much you needed 70. The numbers were astronomical. You needed millions. And most people realized that they had no chance of getting that kind of money. But Wall Street was there to help. And Blackstone and all of the Vanguard and all the people that specialize in corralling and rolling up retirement people's savings. And what they did was they put the American public, American institutions and corporations and college retirement funds and school teacher funds and just all of this incredible sea of retirement money went into junk bonds. Well, why? Because junk bonds are extremely profitable for institutions. They make money by putting the junk bonds together for the company that desperately needs the money. They make money selling it to the institutions. The institutions make money selling it to the individuals and stuffing retirement accounts. And what they learned a long time ago is most people don't know what they're buying. If I asked you to tell me what specifically was in your retirement fund and what companies and what sectors and what percentages, you couldn't tell me. You couldn't tell me why you got to yield so much above the market, except you knew you did it, and the greed gland said, I got to have it to retire. Well, getting a higher yield promised is not getting a higher yield. Putting your money in goes out very quickly into these various schemes, but getting your money back is another thing. Now, we are entering into a major recession. The Fed's tightening rates. We will be at 3% in the federal fund rates by the end of the year. We started the year Fed fund rates, at 2.5? So this is a staggering increase in interest rates, although the numbers seem small, they're not. When we look at the 2-year debt is U.S. Treasury notes, is the bellwether. That is about the part of the curve that institutions and businesses borrow under. And that is back to the same levels in 2007, right before the wipeout. Deja vu all over again, and again, and again, and again. Wipeout again, and again, and again. You got it. So you have a window here. Now, the problem is that people confuse investing with savings. Savings is not investing. Savings for retirement means that your money has absolutely, positively got to be there. When you leave the realm of savings and you start investing, now you take on risk. And what the hallmark of our time is going to be, and when they write the obituary for the baby boomers who are going to be among the most prosperous people to wipe out in the history of the world, will be that they didn't understand what they were buying. So if you're a baby boomer and you think you're sitting fat and sassy, you have got just a small window to get out of your junk bond funds, pay the taxes, and get into the only two investments you can make with retirement savings. That is cash in your mattress, and don't scream if it doesn't make a yield. Yield doesn't mean anything. If your money's gone, they can promise you 40% interest, and if they don't pay you back your money, you got nothing. So savings and cash in your mattress is one. A second place to keep your savings is in U.S. government securities. That's T-bills, that's T-notes, and that's bonds, okay? Then your money will be there. Now, for a long time, it was hard to put your money into U.S. government debt because the yield was so low, okay? That has all changed. And most people have not caught up with that. In other words, the yield on U.S. government securities has been rising and rising and rising, and it's now very favorable for investors to buy into it. So that means that you're gonna have to understand at some point you got to cash in. Now, retirement accounts are tax deferred, tax delayed. They're not tax free, and the U.S. government is in big trouble. Let me tell you a couple of factors that can have to affect your investment decisions. One is the fact that the government undershot. They are not raising enough revenue, and they will be raising taxes. They will have no choice. That means that you are at the lowest tax rate environment of the past 30 years, and it's time, and it's getting time to take your money out of these retirement accounts, and I urge you to do so right now. Now, when you get your money out of those retirement accounts, that's when they're going to pick you up on all their algorithms, pick you up on the Twitter, pick you up on the Facebook, and pick you up and start bombing you with retirement calculators and investments. And what you need to do is turn all that off and go to treasurydirect.gov. That's treasurydirect.gov. That is the place where the little guy settles the score. That is where the little guy can get the same rates that the big corporate buyers get. So that is where the little guy can absolutely buy government securities at the most competitive rate ever. And what you need to do is calculate when you think you need your money and how much. In other words, how much will you need in 2 years? How much will you need in 5 years? How much will you be in 10 years? And then you need to spread out your purchases. Now, listen to me. I want to be very clear here. Corporate debt is about to wipe out. We've had the greatest stock market rally ever. We've had the greatest rise in corporate debt ever. We've had the greatest rise in profits. It is over. We are headed for a recession. We are headed for an inverted yield curve. That means where the short-term rates are higher than the long-term rates. And that is a warning sign of disaster to come. So you've got this small window. Now, as far as junk bonds, they're going to wipe out. You're going to take a huge haircut. Forget about the yield. You're going to lose your principal. And remember, these funds are also the net asset value, the NAV, is cursed against you because they are invested in a whole bunch of pieces of a whole lot of various debts, of various maturities, and of various risks, all high. That's not the way to play this game. You need to go and run for the hills. You need to hide. The U.S. economy is in trouble. We are headed into a severe recession, our biggest one, I believe, since the Great Depression, by the way. And that means that you have got to protect yourself, and you need to get your retirement savings back in savings. You need to get your money safe, secure, and guaranteed to be there. If you don't do that, you will lose your fortune. You will lose your wealth. You will wipe out. Now, don't tell me this hasn't happened before. Look at the wipeout of some of the biggest institutions of the country. Look at the bailouts. And one of the lessons you learned from the 2007, 8, 9 wipeout was, although there was a lot of promises, the big guys got bailed out. The big guys got to buy assets at 10 cents on the dollar, and the little guys didn't get shit. Well, loan us the money, so the money you loan us, then we can loan people on the mortgages. They didn't do it. They foreclosed like no tomorrow. Oh, yeah, if you forgive our debt, then we'll forgive their debt. They never did it. And so you've been had. It's like the tax break bonanza for billionaires. As you are seeing, people are not getting high-paying jobs. Factories are not coming back to the United States. The economy is not being stimulated. We are in for a nosedive with the ground. We are in for a crack up at the end of the runway. And what you've got to do? It's really very simple. You need to change your investment profile. You need to get into savings. You need to get out of speculative things with your retirement money. And you need to run for the hills. Now, I recommend 80% of your wealth in safe, secure cash in the bank and in U.S. government securities. Now, forget this shit the U.S. government's going to wipe out, the dollar's going to collapse. Not going to happen. In fact, the dollar has been soft for the past year, and it's getting ready to have a huge rally. Let me explain to you why. The differential between what a 10-year note pays in the United States and what it pays in Europe is significant. So much so that investors do a carry trade, which is where they get their U.S. government debt bought, and they get a huge return for doing it, and it's risk-free. So the carry trade is where foreigners buy dollars and invest in U.S. government securities. When they do that, they've got to buy dollars. And that's going to create a dollar boom like you've never seen before. Now, you have got a short period of time before the collapse happens. This is the quiet before the storm, without a doubt. Now, we also have political uncertainty, but even without the political uncertainty, we are done. The characteristics of what you've seen is the longest and biggest expansion in U.S. government history. You have seen globally the lowest interest rates ever. In fact, it's been free money in the United States. Okay, that is something that's never seen before. Now they're trying to unwind this debt. And what they're not telling you is they don't know how it's going to go. They have no choice. They've got to get out of the debt, and they've got to prepare for the next recession. And they're not going to tell you also that it is well known among Federal Reserve governors and among bankers we're headed for a recession. And the fact of the matter is, listen to this, you're going to love this. The biggest selling of corporate debt that was held by corporations has been going on. In other words, corporations, the ones that had a lot of cash, well, their business offices, their money managers, bought huge amounts of corporate debt just like you did. The difference is they're sophisticated, and they realize the party's over. And we have seen the biggest liquidation of junk bond debt in history by the pros. And we have seen the biggest level of retirees in junk debt ever. Why retirees don't? Like I said, we started this conversation saying, do you know what's in your retirement account? Do you know what companies and what the complexion of the makeup is? Do you understand the risk profile? And the answer is hell no. All they do is give you a little calculator and show you how much money you supposedly made. But remember, want and get are two different things. You can want a high yield. They can promise you a high yield, but you don't get the high yield until you get the high yield, and you don't get that high yield, you don't get your money until you get all your money out. You know, there's a time when you got to leave the casino. There's a time when you stay in the casino too long, you lose your money. And this has been a wonderful time for junk bond buyers. It's been a wonderful time of high corporate yields. It's been a wonderful time of the biggest economic boom we have ever seen. Not much of a boom compared to past booms, but it's as good as it gets. Now, if you're buying into the next phase of another great grand slam economy, that is not going to happen. If you're buying into corporations returning money and investing in factories and high-paying jobs to stimulate the economy, well, we're now in far enough into that game to tell you, let me tell you where the corporations got all those tax break bonanzas. They spent it on payments to CEOs and board of directors. They gave a vast amount of money back to shareholders. They did huge stock buybacks, and they paid dividends. There's been no investment. In fact, the tax code as written is such that it really encourages them to go offshore. If they invest offshore in both plant and equipment and people, they have effectively zero tax rate on that offshore investment. So you are really driving people offshore. Now, as far as the economy, we're a mature economy, my friends. There's no real job creation, except for dishwasher and low-paying stuff. High-paying jobs in factories are not going to happen because business can't afford to do it. This huge digitization, this robotics, this algorithm, it basically profits the high-skilled few. The vast majority of common people in common jobs on the blue-collar level are about to lose their jobs. That's taxi cab drivers, bus drivers, truck drivers. We're seeing huge layoffs in the banks as we speak, in loan officers and all kinds of service personnel. Why? It's cheaper to go to India. Listen to me. The tax break bonanza is a fraud. It really favors corporations opening factories outside the United States. Look, there was no language in this tax law to bring them to invest in the United States. There was no jobs program. There was no paying down debt. There was no topping up their retirement funds, which were woefully underfunded. It's a party. And they've had a party you've been had. So this is your warning. We are headed for the biggest debt wipeout in history. We are headed for a debt collapse. Corporations have got huge amounts of junk bond debts. Junk bond funds are chock full of shit. And the sophisticated investors are leaving that market in record numbers. And what are they doing? They're leaving the retiree to hold what's going to very soon be a very empty bag with no money in it. Look, you have seen debt wipeouts before. You have seen how this movie ends. Are you going to forget what you learned in 2007, 8, and 9? Are you going to forget that markets wipe out as they rally? Are you forgetting what happens when the Fed raises rates? Are you forgetting what happens when economies peak? It's done. It's done. We are in the capitalist system. And the whole mark of the capitalist system is periodic recessions, periodic debt wipeout, periodic bankruptcies, and we are headed for such a period. The problem is that normally during the good times, corporations pay down debt. Normally during the good times, deficits shrink because tax revenue increases. This is the doozy of all of them, in that we are entering into the recession with the most debt ever. That's consumer debt, all at record levels. That is business debt, all at record levels. That is business junk debt. That means low-quality debt that always wipes out, lowest ever. We've got an economy that's racking up the biggest budget deficit ever. We're about to have the national debt 100% of GDP, something that was unthinkable. We are adding $2 trillion this year to the national debt. The budget deficit is going to go 1.33 to 1.5 trillion. In other words, the tax break bonanza for billionaires was a publicity stunt, a colossal failure, added to the fact that the economy has been stimulated for 10 years like never seen before. Interest and money has been free for the major corporations. So the people that are borrowing money at the junk bond rates, they were the most unqualified corporations, entities that were marginally profitable in the biggest boom ever, if profitable at all. What happens in a recession? Well, what happens is, as you know, corporate bankruptcies increase, corporate profits decrease, loan defaults skyrocket, and weaker companies are the ones that take the brunt of this. Well, who's in your retirement savings account? Basically, a lot of weak companies. A lot of companies with poor balance sheets. A lot of companies that couldn't get the very, very cheap money and cheap financing. That's why they went to the junk bond market. So, in essence, your retirement account is chock full of shit. Shit that's about to wipe out. We are on the verge of the biggest wipeout ever in business debt. And different than other wipeouts, because the retirement baby boomers were great savers, the holders of that debt for the first time are not banks and not financial institutions, but individual savers. So you're about to see the biggest wipeout of savings. Remember, when you left the FDIC SIPC, you left insurance behind. There's no insurance on your retirement savings and junk bond funds. None. There's no guarantee the money's going to be there. There's no one to bail you out. There is no one to guarantee that deposit. And most people forgot that. So you left the banking system where you had some insurance that paid very low rates. You went into the most risky debt of all, junk bond debt, that paid ridiculously high interest rates in comparison to what the going rate was. You have no insurance, no guarantee, no fiduciary, and the problem is that the wipeout is upon us. Now, if you put all these factors together, you need to understand that you are headed for a Class A crash at the end of the runway. You are headed to lose your life savings. Now, I have seen in my career, which is over 35 years, by the way, more money lost by people chasing higher yield than any other single event. I have been looking in horror at the absolute crap that makes up the bond funds in America. It's just horrifying. And remember, there is no insurance. There's no guarantee. And if you want to sue them because they didn't cover their fiduciary rights, well, your fiduciary rights by them is questionable. That's the first thing. The second thing is, what are you going to get? Turnip juice? They're done. When the wipeout happens, there's no money, there's no cushion, there's no reserve. We are priced for perfection. In other words, in the scenario that makes up the junk bond market, in the scenario that makes up retirement funds, there was no consideration of what this fund would look like in a recession. There was no consideration of how much defaults the fund could stand. Why? Because people in a 10-year bull market forgot the lessons of the past. They forgot that markets go up and markets go down. They forgot that debt wipes out. They forgot that recessions come along. We actually have people in positions of power, including the Federal Reserve and the Treasury, that truly believe that because of algorithms and sophisticated mathematical models, the days of recession are over with, and they've so said. They truly believe that corrections in stock markets are not going to happen. They truly believe that debt default, wipeouts, recessions, bankruptcies, major business failures that you see are a thing of the past. And that is the clarion call of people who are about to lose everything. So I urge you to get your money out of all retirement accounts. I urge you to get out of all corporate bonds. That's all. That's ALL. I urge you to go and cash in your mattress nice and legal-like. I urge you to buy U.S. government securities at Treasury Direct. I urge you to prepare for the biggest recession we've had in our lifetimes, and I believe this is going to be a depression. Now, I'm not even going to begin to talk about ad nauseum the political risk we face, but their significance. But throw that aside. We are in 10 years of the biggest stimulation program ever provided by any central bank in the history of mankind. And those entities, the Federal Reserve of the United States, is pulling back that quantum easing. The Federal Reserve is raising rates. The Treasury has got a mountain of debt they've got to sell. So we are in a situation of crowding out. We are in a situation where corporations are not going to be able to borrow cheaply. And remember, no one knows what happens. The junkie has been on the free money, low interest rate fix for 10 years. No one knows what withdrawal is going to be like, except it's going to be bad. No one knows where the junk bond debt is, where the shit paper is. No one knows what the corporate balance sheets look like. Not really, because it's been basically financial engineering of all values. Everyone's been lying. Everybody's been cooking the books. Everybody's been playing the game here. And now the money's drying up, which means we're headed for survival of the fittest, survival of the biggest, survival of the most prosperous. And here's the problem. We don't know who those are. We don't know what corporate balance sheets really are. We don't really know what's held in banks. And the reason why is that we've had 10 years of balance sheet manipulation. We've had 10 years of games played that will put people in jail this time. We are headed for the biggest financial wipeout ever. We are headed for the biggest corporate bankruptcies ever. We are headed for the biggest stock market crash ever. we are headed for the biggest banking wipeout, and the big one is we are headed for the biggest wipeout in corporate debt ever. And unfortunately, that corporate debt that was normally held by sophisticated investors that understood what junk bonds are, knew how to access the risk. You have the most unsophisticated investors who don't even know what they bought with their precious retirement savings, that looked at a yield calculator for how much they were told they need to retire on with the greed glands flowing. They never did the math. They never did the research. They wouldn't even know how. I mean, it's not any accident that junk bond funds hide the risk. It's not any accident that you cannot rate the risk in these securities you're buying. You're buying on blind faith. Now, do you really, really, really trust Wall Street? Do you really trust those hucksters with what you've seen? And the answer is hell no. Of course you don't. But the problem is that it's a burning firehouse syndrome. Now, when the masses realize that the stock market's over, when they realize we're in a major economic slowdown headed for a recession, when they realize interest rates are rising and corporations cannot finance that debt, they can't roll it over, they can't pay it, that's when the panic's going to happen. You are on the verge of the biggest junk bond panic and collapse ever. You are going to see people running for the door like you cannot comprehend. You are looking to see values of junk debt, values of junk bond mutual funds plunge like never seen before. You are about to see the most prosperous, hardworking, saving group of people, the baby boomers, reduced to abject poverty. You have got the biggest swindle ever. Look, these debt levels are not sustainable. Everybody knows it. There is not the liquidity to pay back this debt. There's not the liquidity when baby boomers need their money and want to cash in to do it. You know why? Well, because the generations coming behind the baby boomers don't have the savings. So there's not any replacement cash, which means we're entering into a situation of forced liquidation of debt in a bear market by entities whose debt is rated very poorly, by entities that don't have any other access to capital, by entities who really are not profitable. And you have got this debt held by people who have no idea in the hell what they got. They have no idea what the risk profile is. They have no idea what the default rate's going to be. And you know what? There's no one to tell them. Why? Because they've been had. Remember, the Wall Street hucksters, the big corporations that were parking their excess funds in these junk bond funds, have in the last few months done their biggest liquidation of junk corporate debt ever. Now, what do they know that you don't know?
From an undisclosed location somewhere in the Northern Hemisphere, it's everything Wall Street doesn't want you to know, everything the financial media won't tell you, everything mutual fund managers are hiding from you. This is the voice of the underground, the Wall Street Underground.
There's a man who leads a life of danger. To everyone he meets, he stays a stranger.
What are all the mutual fund promises about this bold new future? How come Wall Streeters aren't running for their lives and mutual fund hucksters? Why is no one talking about the $8 trillion they wiped out?
Secret